What's going on, guys? This is Lior and welcome back to my channel. Now, what I thought I would do in this video is talk about what I'm calling the end of the quick flip of multifamily. You know, one of the defining characteristics of the last couple of years in the multifamily space was people coming in and buying property and then literally flipping them like 6 or 12 months later for massive gains. I think that party is firmly over. There's a lot of economic indicators as that point to as to why that is. So we're going to talk about why it's over and what that impact is for you as an investor in the multifamily space. So with that, let's get at it. What's going on, guys? My name is Lior and welcome back to my channel. Now, before we get into the meat and potatoes of the video, two super quick things, guys. Number one, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe button for me. I am putting out tons of weekly content on this channel, talking all about multifamily, from operations to construction to deal analysis, the environment, and everything in between. So if that's the kind of content you're looking for, make sure you subscribe to my channel. So as I said in the intro, right, one of the defining characteristics I think of the last couple of years in the multifamily space specifically was just how hot the market was, right? I mean, literally from coast to coast, you would hear investors buying up property and then 6 to 12 months just flipping them for 25 to 30% premiums over what they paid for. Just like ridiculous numbers, right? And a lot of it was driven by rent growth, right? I mean, you know, you could have your projections put on paper, but you know, the rental markets, particularly in the southern part of the US, like the Southeast and the Southwest, were just growing at such dramatic paces that they were just bringing up NOIs organically, right? Without investors having to do anything, right? I mean, you would just hear so many stories of investors buying buildings with potential plans to do some value add and potential some renovations. But again, the market was just so strong that the rents just kept going up without needing to deploy the CapEx. So their NOIs literally went up organically without actually spending a dollar into the building. Now, obviously for the people that were able to exit in time, that was a fantastic model, and you know, good for them, they got out and were able to make their money. But what about the people that are in the properties today, right? Like if they had those same sort of like insanely aggressive growth assumptions on the rental side in particular, right, they might be in a little trouble. You know, there was just a report that came out on realtor.com showing that we just had one of our slowest months in terms of rental growth since the last couple of years. And I think what it's pointing out to is that rental seasonality is back, right? I mean, you know, the last couple of years, we've literally just seen rents being on fire like all year round. I operate in the Northeast, and typically we're a very heavy spring and summer market. And again, same thing, the last 2 years, we kind of saw all year round just the rental market being on fire. But it looks like seasonality is finally back, and honestly kind of makes sense, right? Because at the end of the day, you know, we could not sustain that kind of rental market that we had for that long, right? At some point, you know, a family that's renting or a young professional that's renting is just gonna say, I don't know what you want me to do. I literally just cannot afford anymore, right? Like I just cannot afford to pay any more rent. So I think we're essentially starting to get to that point where we've just capped out what people can truly afford, regardless of how hot the markets were. So where does this leave us now? Well, for operators that bought buildings, right, and had these insanely aggressive growth projections with maybe some value add, well, what I think they're actually gonna have to do now is execute on the value add, right? Like they actually have to go in and make the cosmetic improvements, exterior improvements, common space improvements, whatever the business strategy was, they actually have to go execute on it. Now, the issue is there was also a study done recently I read that said that, you know, in the last couple of years, we saw a massive amount of new operators enter the business into the multifamily space because obviously it was so attractive and so hot. So now what we might be seeing is a bunch of deferred maintenance and buildings that maybe were flipped and not necessarily really well taken care of, right? With the combination of potential new operators that don't have a lot of experience, particularly in construction and management and how to actually execute a business plan. That sounds like a potential recipe for disaster, right? Because now they've got these brick and mortar investments, right? Which is what real estate is, that need to be taken care of, that need, you know, can still potentially make money, right? If you actually go and execute the plan. But it's a tricky situation if they don't have the expertise and know-how. We'll see what the solutions are going to be. Obviously, some operators might be forced to raise additional equity or potentially sell at losses. I think we're at a really kind of a crossroads in the industry, right? There's just a lot of moving pieces right now. Deal volume is very, very slow. Rental markets are finally starting to slow down. And people are sitting on, a lot of people have flipped properties. They're not properly investing into them. So the question is going to certainly become, what's going to happen? Are people going to be able to continue to float these properties? Are they going to be able to execute on business plans? And now more than ever, execution know-how is top priority, right? You could still make money in the space. We're still underwriting a lot of deals, but you really got to be able to execute properly in order to hit the investment metrics that you think you're going to be able to hit. So that's my 2 cents on what's going on today. Of course, if you guys have any questions, any concerns, make sure you shoot them in the comments below.